Okay, so in today's lecture we will cover refund and doctrine of unjust enrichment. This doctrine of unjust enrichment, the topic of this doctrine of unjust enrichment is related to refund. In fact, from refund chapter we have derived this topic, doctrine of unjust enrichment. So we are covering both these two topics at one go. So before starting this refund, let me show you the original act. Chapter 11 of the CGST Act deals with the topic refunds. There are 5 sections in this chapter: 54, 55, 56, 57, 58. So in total we have to cover these 5 sections to complete the topic of refunds. Now let me show you the simplified version of this refunds in Word file. So let me share a new file with you and we will cover this refund with the help of that file. I hope the new file is visible to you. Is this new file visible? Can everyone see this new file? I hope this new file is visible to everyone.
और अगले दिन मेरे कजन और मेरे ग्रैंडफादर को किचन में मेरी मॉम की लाश मिली। उसने बेसबॉल बैट से उनके सिर पर वार किया।
Okay, now let us see this refund. Section 54, refund of tax. So you must know that what will be refunded. What will be refunded under income tax? What will be refunded? Tax. So in the GST also, what will be refunded to you? Tax. That's it. Which tax will be refunded? We know that every exports are zero rated. So if you have done some exports and paid some tax, then you have a right to claim that tax pays as a refund. So refund is of first point. Tax. Refund includes two things. First, tax will be refunded. Which tax? Tax paid on zero rated supplies, because all zero rated supplies are zero rated. That means nil rate. But if I have paid tax because I wanted to claim ITC, then I can claim that tax paid as a refund. Second, all the inputs used in manufacturing some goods or services which are zero rated, then I have a right to claim that input tax also. That the tax paid on inputs, not input tax, tax paid on inputs which are used in manufacturing goods or which are used in providing services or supplying services, supplying goods. I may be Mr. X, for example, I am Mr. X. I may be directly supplying some services outside India. It becomes my zero rated supply. Or it is also possible that I am using some inputs to supply my services. So whatever tax paid on those inputs, that is also subject to refund. So refund is of what? Tax paid on zero rated supplies, tax paid on inputs which are used in making zero rated supply. Had there been no inputs, for example, I would not have made any this zero rated supply. So refund of tax of two things. First point, zero rated supply. Second point, all inputs, tax paid on inputs which are used in zero rated supply. Third point, some supply of goods, not services, some supply of goods, only goods, is assumed as exports. In reality, it is not export. In reality, it is not export. Had it been in reality an export, there would not have been any need of using this word deemed exports. So in reality, it's not an export, but it is assumed to be as export. And those are written in section 147 of the CGST Act. Section 147 defines some sales which are not actually exports, but which can be deemed to be as exports. So all tax paid on zero rated supply or deemed exports, or all tax paid on inputs which are used in zero rated supply. These three taxes are those taxes for which assessee or taxpayer can claim a refund. Again, three taxes: zero tax paid on zero rated supplies, tax paid on deemed exports, tax paid on inputs which are used in making zero rated supply. These three taxes can be refunded. Then next point, refund does not include tax paid by me on my supply. Refund also includes input tax credits in case I couldn't avail those. So refund doesn't include only refund of tax paid by me. It also includes that tax which I have paid on my purchases. In above 3 points, this tax is the tax which I paid on my sales. Now these 2 points are those taxes which I have not paid to the government on my sale, which I have paid when I purchased the goods. I hope the point is clear. So I can claim refund of unutilized ITC also, unutilized input tax credit, where I have paid tax on my purchases, but I couldn't claim it fully. For example, I have ITC of 1,000 rupees, or suppose I have ITC input tax credit of 1 lakh rupees. When I did the sale, this sale was found to be zero rated supply, and on zero rated supply, I know that there is no tax, so I will not pay any tax. So how can I use that 1 lakh ITC now? Answer is no use. So government says you can claim this 1 lakh rupees as refund. So all unutilized ITCs, when you are making this supply zero rated supply without paying any tax, then you have a right to claim this as ITC. Let me show you with the help of this board. I hope the board is visible to you and my voice is also clear to you. Let me show this to you. So refund of what? Is this font size visible? A refund of tax on sales and refund of tax on purchases. Both the taxes can be refunded. Refund on sales, refund of tax paid on sales, and refund of tax paid on purchases. Now, I do not use the word sales in GST. Normally, I use which word? Supply. So there can be three types of taxes which I have paid when I sold something. First, when my supply is what? Zero rated. First point. Second, when my supply is what? Deemed exports. Third point, when I am supplying, when I am making zero rated supply, but the inputs which are used in making zero rated supplies, the tax paid on those inputs is also refunded. So this is the refund of tax. Tax paid on zero rated supply, tax paid on deemed exports, and tax paid on inputs which are used in zero rated supply. Then not only tax paid on these supplies, if I have paid some taxes on my purchases, those taxes can also be refunded. When? So now first point. So tax paid on purchase is nothing but your input tax credit. Now when this input tax credit can be refunded? When this the item or this purchases are used to make zero rated supply. When the tax which you have paid when you purchased something, those purchases if are used to make zero rated supplies without payment of tax, then your entire unutilized ITC can be claimed as refund by you. Now before this, this may be a little bit confusing point, but let me tell you 2 points in this case. I have 2 options to make zero rated supply. First option, that do not pay any tax. Second option, pay the tax, claim the ITC, and then get back the refund. So I have 2 options to make zero rated supply. Option 1. So this is separate point. Option 1 of making zero rated supply. Option 1. I paid 1 lakh tax on purchases. This is my ITC. I paid 1 lakh tax on purchase. I'm making a zero rated supply of 3 lakh rupees. On 3 lakh rupees, suppose, or I'm making a zero rated supply of 10 lakh rupees. And on 10 lakh rupees, suppose the rate is 28%. Suppose the rate is 28%. So how much output tax I'm going to pay? If my value of zero rated supply is 10 lakh rupees, 28% is the tax rate. So I will pay 2,80,000 as tax, output tax. Okay, I purchased some raw material on which I have paid 1 lakh tax. This raw material is used to manufacture some goods, and these goods are sold at 10 lakh rupees to Germany. And the tax rate is, for example, 28%. I have paid 2,80,000 as tax to the government. So how much difference technically I will pay now? 2,80,000 minus how much? Minus 1 lakh ITC. So I am going to pay how much to the government? 1 crore 80,000. So technically I am paying from my pocket only 1 crore 80,000. This 180 also I can claim as a refund from the government of India because this supply is but zero rated. I can claim this as also what? Refund. Clear? So technically I am not paying anything. There is another option also of zero rated supply. Option number 2. 1 lakh is the material, 1 lakh is the tax paid on material. And now 10 lakh is the value of my export. And government says second option, do not pay the tax. So I will not pay any output tax. There is no need to pay any output tax. Now, if you do not pay any output tax, technically your output tax is zero. So you will not be able to use this 1 lakh ITC. The government says you can also claim this as what? Refund. This is my refund, which I'm discussing my first example. That unutilized ITC, which you cannot utilize. Why? Because you have made zero rated supply without paying any tax. You have a right to claim this 1 lakh also as a refund from the government of India. Any doubt you ask? Is this point clear? I can get a refund of tax paid on zero rated supply. This is the tax paid on zero rated supply. 2 crore 2 lakh 80 minus 1 lakh ITC 180 which I have paid to the government. I have a right to claim this as refund 180 under this point. Okay, is this visible? There may be some reflection of light. Okay, there may be some reflection of light. Is it visible? I think it is visible now. There is no reflection of light. Can you see this now? I hope you can see it. Again, listen, refund of what? Okay, I think you can see this now. So refund of what? Refund of tax paid on zero rated supply. And second, refund of unutilized ITC in case you have made zero rated supply without payment of tax. Any problem you ask. It may look a little bit technical, but if you have any problem, you please ask. Okay, I'm waiting. You can reply through chat window. Any problem, you please ask. Kindly reply through chat window. Okay, again see the theory. I hope this screen is clear to you. Is the screen visible? Can you see this screen? Kindly reply through chat window. Can you see this screen? Okay. So what we are discussing now, I wanted to simply remove this confusion. That's it. I can claim 3 types of taxes which I have paid on my supplies, and I can claim 2 types of unutilized ITCs which I have paid on my purchases. So I have covered first unutilized ITC. Entire unutilized ITC, because of my zero rated supply which I made without payment of tax, I have a right to claim this as refund. And second is what? Second is that now here I am making a second is that in my example, for example, when you purchased something, you paid 18% GST. If you purchased a product of 10 lakh rupees, you paid 18% GST. That means 1 crore 80 lakh has tax. 10 lakh into 18%, 1 lakh 80,000 has tax. On my purchases of 10 lakh rupees, I have paid 18% tax, which is 1 lakh 80,000. Now, when I am selling this product, for example, at 11 lakh rupees, after adding 10% profit margin, I am selling this product at 11 lakh rupees and the rate is only 12%. So how much tax I am supposed to pay? I purchased a product of 10 lakh rupees. The rate was 18%. I paid 1,80,000 as tax. I'm selling this product at 11 lakh rupees and the rate is only 12% because it is possible that my raw material was taxed at higher rate, my final product is taxed at lower rate. So 11 lakh into 12%, 1,32,000. Okay, it's only 1,32,000. 1,32,000. From 1,32 minus, I will deduct 1,80,000. So there is a 48,000 rupees balance. Government says you can also claim this as refund. Why? Because my finished product was sold at less rate as compared to the raw material which I purchased at higher rate. So I have no option now to utilize this ITC. So government says no issue, claim this as a refund. That's it. So this is what my meaning of refund. 5 things. 3 taxes on sales, 2 taxes on purchases. That's it. So this is the meaning of refund. If you have any problem, you ask me. The meaning of refund is technical. So many people do not understand the meaning itself. The meaning of refund was technical. Any problem you can ask me. And then now it will not take much time to wind up this chapter. I think I can proceed now. Shall I proceed? Okay. Now next point. So for the timing, for the past 20 minutes, we were discussing only the meaning of refund. If meaning of refund is clear, then there is nothing in this chapter because then everything is clerical. So now next point. You have 2 years time limit to make an application of refund. You can get the refund, but you have 2 years time limit. You should make an application to the department and they will process your refund. That's it. Next point. In some exceptional cases, you have not 2 years. You have only 1.5 year or 1.5 year to make the application. You are not supposed to learn these things. You simply learn the concept. The 2 years time limit to make an application. In exceptional cases, the time limit to make an application of refund is 1.5 year. No need to learn this concept. Okay, so in the recording you will get the entire screen, but there is no need to read the entire screen. The topic which I am discussing, only those topics you have to read from this screen. This meaning of relevant date, no use for your level. Ignore it. Now next point, directly after this 2 years and 1.5 years, the topic relevant is refund amount will not be given to you directly. Though you have paid the tax to the government, but it will not be given back to you. Government will check first. Government will verify that really you are entitled for refund or not. Though I have paid the tax to the government of India, but now when it comes to refund, government will first verify me whether I am really entitled for refund or not. Just because I have paid tax to the government, it doesn't mean that in reality I am entitled also to get the refund. So government says, first we will transfer the amount not to you, but to which fund? Consumer Welfare Fund. Though I have paid the GST to the government, but if in case I will make an application of refund, I will get this amount, but not directly. First, government says we will transfer this amount claimed by you in the Consumer Welfare Fund. If we are satisfied, that your claim is genuine, if we are satisfied that your claim is genuine, then within 2 months we will transfer the amount to this fund. It will not be paid to the applicant directly. This is one thing. Though I have paid the tax, but when it comes to refund, first they will verify my claim, and within 2 months they will transfer the amount to Consumer Welfare Fund if my claim is genuine, but not to me directly. They can make the payment later on, but after verifying so many things, but not to me directly. Second point, if refund amount is still 1,000, is less than 1,000, then refund will not be made. Government will not waste the resources of making the refunds of less than 1,000 rupees. This is first point. That in so many cases, refund will be transferred to the Consumer Welfare Fund, not to the applicant directly. Next point. In which cases it will be made to the applicant directly? Now there are some genuine cases also where it will not be transferred to the Consumer Welfare Fund. It will be paid to you directly. So instead of crediting the fund in consumer welfare fund, it will be paid to the applicant directly in these 7 to 8 situations. With this point you should know, and this question you should know from theory point of view, that what are the cases or situations where refund will be made to the applicant directly rather than transferring the amount in the consumer welfare fund. So what is my first case? If I am an exporter of goods or services, so my supplies are zero rated, there is no need to transfer the amount in consumer welfare fund. Directly the amount will be transferred to the exporter, that means me. Second, refund of unutilized ITC. Why? Because my outward supply is zero rated without payment of tax, or I have paid taxes on purchases more than the taxes on my supplies. Then also payment can be made, refund can be made to me directly. In case I have paid the tax on any supply which was not actually which didn't took place, I made the payment assuming that the supply will happen after 2 days, but because of some situations happened that after 2 days I refuse to make a supply. Government says in that case the refund can be paid to you directly. Fourth point, I treated some supply as interstate. Later on it was found to be intrastate. So government, now when it is inter and intra confusion, what government says, that if you found this supply to be intrastate, you pay the tax, and for interstate supply, the tax which you have already paid, you ask us the refund. So don't ask for the adjustments to remove any confusion. I assumed some supply to be interstate, I made the payment of tax, IGST. After some time I found that, oh, the supply was intrastate, so government says no issue, earlier tax you claim it as a refund from us direct. Vice versa is also true. I treated some supply as intrastate and I paid CGST and SGST. Later on I found that the supply happens to be interstate, so what government says, no issue, claim this as a refund. And this is a relevant point. Amount paid by the applicant in case he has not passed the incidence of such payment to any other person. I paid the tax by mistake. I paid the tax to the government by mistake. Though I paid the tax by mistake, I collected this tax from my consumer. And by mistake, for example, consumer also paid the tax to me. Now see this with the help of example. I paid the tax. Is this board visible? I hope the board is visible now clearly. I paid the tax of 2000 rupees to the government. Later on, I found that I should not have paid this tax. By mistake, I paid the tax. Later on, I found that I should not have paid the tax. But I paid the tax by mistake. Suppose on this item, there was no tax imposed. Suppose in reality, this item was tax free. In reality, this item was tax free, but I by mistake applied the tax and paid 2000 tax to the government. I sold it to the buyer, Mr. Y. He is the consumer. And he is the supplier. He is the consumer. He purchased the product from me. He also didn't know that this product is tax free. So whatever tax I paid, he paid the same tax to me. I collected this 2000 from Mr. Y. I hope my example is clear now. As a supplier, I didn't know that this item is tax free, so I paid 2000 tax to the government. My buyer also didn't know that this item is tax free. He didn't question me, and he paid this 2000 to me. Now then, can I claim this as a refund? Can Mr. X claim this refund? Can Mr. X claim this as a refund? Can Mr. X claim this as refund from the government? Answer is no. Why? Because I have passed this wrong collection of tax to other party who has a right to claim this refund. Mr. Y can ask this to be claimed as refund from the government, but not me, but not Mr. X. So what I have written in that theory, amount will be refunded to me directly if the incidence of tax has not been passed on to the another person. But what I did in my case, I passed the incidence of tax to Mr. Y, so I loses the right of refund. Is the concept clear? Is the concept clear? Kindly reply. Is this concept clear? Who can ask the refund? Who can ask the refund? Who has not passed out on the incidence of tax to another person. Only that person can ask the refund, otherwise not. So in my example, though I have paid my mistake, but nothing has gone from my pocket because I have collected the entire amount from Mr. Y. So Mr. X loses the right of refund. Mr. Y can ask for refund later on if Mr. Y wants, but not Mr. X. I hope this point is clear. And now here comes the concept. So I'm stopping you for 2 minutes. I'm stopping this topic. And now let me discuss doctrine of unjust enrichment. It is only because of this point. Because of this point, 6th point, doctrine of unjust enrichment arises. What do you mean by unjust? Unjust means unjustified, which is not my right. Enrichment means enrich, getting richer. Unjust enrichment. I have no right to become richer by using illegal means. I have no right to become richer by doing some smuggling, gambling, etc. Illegal things. I have no right to be richer at the expense of some another person. This is unjust enrichment. Here, if Mr. X gets a refund of 2000 rupees, don't you think it is unjust enrichment? Because Mr. X will become rich by 2000 rupees at the expense or at the cost of Mr. Y. Is the concept clear? Unjust enrichment. No person has a right to just become rich person at the expense of another person. You become rich by using justified means. As a businessman, you purchase something and you sell the product. There is no problem. You can earn the profit margin. It is justified. If consumer is willing to pay you the amount, then there is no problem. You can earn as much money as you can. But in this case, as far as refunds are concerned under GST, no person has a right to claim that refund from the government which doesn't belong to him or her. So this is the meaning of doctrine of unjust enrichment. All refunds are made by the tax department only when any application passes the test of or passes this doctrine of unjust enrichment. If the department is satisfied that the incidence of tax has not been passed on by this person who is asking for refund to another person, that means doctrine of unjust enrichment is satisfied and this person now has a right to claim the refund, otherwise no. So every person has to pass this test. The test is what? Doctrine of unjust enrichment to claim a refund. Any doubt now? This doctrine of unjust enrichment has arisen because of this 6th point. Every refund has to be passed by this doctrine of unjust enrichment. If any refund person has clear with this doctrine, then the refund will be processed, otherwise no. Shall I proceed? Is doctrine of unjust enrichment clear? Getting rich at the expense of another person is not allowed. Okay, great. So now doctrine of unjust enrichment is over. Let me come back to my topic. When refund is directly transferred to the applicant. That's it. So this topic you should do. Refund amount paid to the applicant. refund of tax paid on exports, refund of unutilized ITC, tax paid on supply which is not actually happened, intra, intra. If unjust enrichment is not there, refund can be made. Next point, refund of integrated tax paid on supply of tourists leaving India, section 15 of not CGST but IGST. So one section is also in IGST Act, refund. If you have gone to any foreign country and from airport of that foreign country, if you have purchased something, then the taxes of that foreign country will be refunded to you because you are an international tourist. So no foreign country wants, normally no foreign country wants taxes collected from the international tourist because the tourist has come only for very small duration. Same is the case in India. If any international tourist is purchasing any item from Delhi International Airport or from any other international airport, the refund of tax will be paid, done directly to the international tourist at the same place. Okay, some separate people will be sitting there on every airport, international airport. You will find some separate people sitting. They will collect your bill and they will refund the amount in international currency, maybe dollar or pound, whatever is. But section 15 of the IGST Act says that any integrated tax paid by any tourist, that tax is entitled for refund directly. Now, if tax which is to be refunded to the applicant is not refunded within 60 days, then government has to make not only the refund amount but interest also at the rate of 6%. If there is a delay by the government of India to process the refund on time, then government has to refund the amount along with the interest at the rate of 6% per annum.